Melody. Great to talk to you again. After talking to you, I felt I really needed to get your message out to as many people as possible. Um, Melody Wright is a writer, and she's a strategist and a GFC one survivor. And Melody, why don't you take us back to, I know you were going to school full time during the Great Recession, and you ended up, and you were working, you had to support yourself while you were in grad school, and you ended up in, you know, uh, being thrown into the fire during the Great Financial Crisis, which you call number one. So why don't welcome. I'm
Thank
glad
you.
you, thanks for granting this interview. Why don't you tell our audience a little bit about what you experienced then and some of the similarities to what you're seeing now?
Sure. And so I fell into the fire in 2006, September of 2006, right before as things were starting to deteriorate and it was starting to become obvious. And our private equity buyer, Cerberus, came in and needed to understand how they could get a purchase price adjustment because they realized they'd paid way too much for our company, which was a known at the time as one of the largest subprime mortgage lenders. However, we also had a huge agency book, and that's important. And I'll talk about that later. But essentially, we had in October, we had a party, balloons were falling from the ceiling. And then the next thing you know, we were laying off thousands of people, doing massive write downs on our assets, our securities, our mortgage servicing rights. And it was just, really, we were on the number one list for ML mortgage lender implodometer for
Oh,
several years. But in reality, our subprime book was only about 17%. And that'll be important as we get later in the conversation. So, yeah, it was just absolute chaos. But because so many people were getting laid off, it was an opportunity to learn the business in a way that I'd never get that opportunity again. I was in corporate finance. So we were at the tippy top, working with the executives and all the business segments. And I got to know that business from both an origination and a servicing side. And the servicing side is one people don't talk about a lot, but it's very important. The servicing is just the taking of your payments. And so we rode out that chaos until ultimately we had to go into bankruptcy. But that was much later than people imagined. We filed bankruptcy in 2012. 2010 is when delinquency actually spiked, but
okay.
it stayed high. But from there, I just went off to once kind of the bankruptcy was over, I went off to a whole bunch of other non-bank originators and servicers to try to help them, to adhere to Dodd-Frank. And I got a ton of pushback. The big five, Chase, Bank of America, Citi, GMAC, and I'm forgetting, I always forget one, but they got into a whole bunch of trouble and they had to do everything exactly right. And that's when, Dodd Frank was enacted. So when I went out to the non-banks, because a lot of the lending was being pushed out to them because Basel III requirements were just too onerous for the banks, to try to help them get up to speed with Dodd Frank. And they really never could do that. And I began to wonder, like, okay, maybe it's just these smaller non-banks. But what I've come to now realize is that in reality, we never fully, no one in the industry ever fully adhered to Dodd Frank. They took out the DTI or debt to income requirement back in 2020, I believe, or 2021. And so the industry never reformed. But what happened is lending kind of went, that risky lending went from the private market to the government market. And so 85% of what's originated in mortgage loans today are actually bought, are delivered to the GSEs or government sponsored enterprises or agencies, Ginnie Mae, et cetera.
Yeah,
And so the government came in and with FHA, which
right.
was supposed to be largely a first time homebuyers product, they essentially doubled that. And you wouldn't believe some of these credit scores. And so they are essentially the subprime of today, and they're about 15% of the market. And ultimately, FHA is why my company went into bankruptcy. It wasn't even subprime. It's we wanted to get into FHA because you got better points on the upfront.
Of course.
but no one ever,
Overages,
yeah,
right?
yeah. And then nobody ever realized you cannot find one person in the entire mortgage industry that can give you a life alone profitability. Can't do it.
Yeah.
Because they look at origination and servicing very differently. Anybody that services FHA would not, in a default time period or cycle, would never ever want to be in that product. So, so what happened? I kind of went out to fintech. I decided, okay, I want to build technology to fix things because you wouldn't believe these systems at the banks. They're still blue and black screens or blue and green screens. Walk around PNC today, you'll still see that. It's all of them. So I tried to do that. The industry really didn't want that kind of change either. So I really started diving into macroeconomics and really trying to understand that again. What was going on? Why was the stock market up so high? And as I was diving, I started reading things about the housing market that didn't make any sense. And so I got out on the road, especially this inventory that there was, or this narrative that there was no inventory. I
Yeah.
was like, what are you talking about? That makes absolutely no sense.
We're still hearing that.
Oh, we are still hearing it. And we'll still hear it till after the election. It probably by June of next year, hopefully, I don't have to listen to that garbage anymore because it's everywhere. But I went out on the road in January of 23 and went all over, kind of these Sunbelt states and looked and saw just and I'm not exaggerating, at least 4 times as much inventory as was being reported, and these empty new build sites all over the country. And that was not what we were hearing in mainstream media. And so when I got back, I just kept digging and digging into the data and trying to understand how everybody could get it so wrong. And that's when you kind of realize it's willful and to some degree, it's
Okay.
just it's a narrative. The National Association of Realtors is the largest
Okay.
lobbying firm in Washington. I mean, it's just, kind of that simple. So that's kind of trying to do it short, Dale, because I know we don't have a lot of
No,
time,
that's
but
great. You know what? There were a lot of people talking about bear market, another crash in housing, especially during the Fed's tightening regime. Everyone was saying housing crash down 40, 50%. Where was your head at during the Fed tightening? And has this taken long? I know when I trade, I'm always early, and things always seem to take a little bit longer to play out. Just like in the movie Big Short, things were
yes,
falling apart and they weren't getting paid. They were actually
right,
losing money during that
right,
time period.
right.
So, uh, when did you start think this was going to happen, and did it take longer than you thought to have these conditions?
Yeah. So, it always takes longer, Dale. I'll just say that really quickly. But,
Okay.
to me, I always had a long-term thesis. There were a lot of people out there that said, housing was going to crash overnight. Now, with the way that prices ran up in 21, I did think we could potentially see a pocket, and we might see that pocket in 2025, where you saw kind of a more precipitous drop than you did back during the GFC, because essentially it was 2 years we got up to that level, and
Right.
prior to the GFC it took much longer. But where my head was at, and I love that you're talking about the 10-year. It's my favorite thing to watch. This
Okay.
time period right now reminds me so much of what happened in October of 2022. And that is when I truly, all the signs were there. The 10-year was kind of screaming up. And that is terrible news for the builders. That's terrible news for people in mortgage finance. And so, really, as we entered into 2023, I think everything was turning. You could see it all. Everything was turning down. But then what happens? We got to March of 2023, bank failures, and the BTFP.
Uh,
And I
yeah.
really believe that just gave us runway, sentiment, like a stronger, okay, they're going to be there to backstop us again. So let's go out and let's gamble some more. But I do. So I would have thought I feel like we're exactly back at 2022 right now. And we're turning. And I often say, housing, the Titanic takes a very long time to turn, but
Yeah.
once it
It does.
turns, it sinks a lot faster. And so I think we are actually rounding the corner to seeing that distress. We're at lower sales than the GFC right now. So
Okay, and do you have a view on the 10-year? Are we going to go challenge these highs that we had at 5%? Because this surprised me, Melody. If you watch yields, um, this measured 360, but when they cut rates by half, I thought, well, maybe it'd be a sell the rumor, buy the fact, but this strength has surprised me. The move in the yields, move in the dollar. What are you thinking here with yields?
yeah, so you know, I have to be honest, I wasn't as surprised. And I've been studying
Okay.
them as well. And I just, so Dale, I don't know, but I have my feeling is that they may persist at these levels for a little bit of time.
Okay.
And we, I know folks believe we might actually be entering an uptrend. I'm not exactly there yet, but there is something happening. I don't know what it is. If it's we're rounding the corner to year end and there's liquidity management going on and there's collateral shortages, but there's something up. And I just have a feeling we may sit here for a little bit of time. But this is you're the trader. I'm
Okay.
the
All
observer.
right. All right. Well, we were talking about during our webinar about Blackstone, and they're
Mhm.
the largest corporate landlord. They have 300,000 houses. A lot of them sit empty, and people think that they would never liquidate. Um, isn't it possible that we have a situation? I mean, I've heard of BlackRock selling things that weren't working, like commercial office buildings, handing back keys. So is this going to be part of the supply scenario?
It's already happening. If you look at San Antonio, which has very large institutional ownership, they are fire selling down there because there just is so much inventory. And so I went to a specific neighborhood where it was actually a first key, which is Cerberus. They never learned a thing because they got a government bailout. And you could see they don't get the homestead exemption. And so their tax bill was $30,000 because property taxes have gone up exponentially, as has
Right.
insurance, and that
Yeah.
just those carrying costs don't make sense anymore. So it was in a nice single family neighborhood, and they were fire selling it. I mean, they were just dropping the price. And so guess what happens to the rest of that neighborhood? So absolutely, Dale, it's happening in Florida, it's happening in Texas, and I guarantee you it's happening in other locations. It's just so hard to see it because you have to go to the county records to truly understand who is selling. And that takes, we have over 3,000 counties in this country, and they're not on a standard system. So
Yeah,
that's
it's a lot
something
of
I
work.
learned, and it's a lot of work and it takes a lot of time,
Yeah.
but they're
Okay, so
selling.
all
Yeah.
right, and you said that the hurricanes and what happened in Florida and almost got to where you are. We know what happened in Tennessee. Uh, that it changed everything and that it was going to speed up the scenario
Mhm.
that you're talking about. Why?
Yeah, so I've been ever since we've been talking, I've been digging into the numbers as well, Dale, and you can already see it. And so Houston and the areas impacted by Beryl are really good case study where you could look at delinquency prior to Beryl hitting around kind of around the 5% mark. Now it's at the 6.5% mark. And that only happened in July. And, I managed to fault, I forgot to mention that during the crisis as well. And that Sandy was huge. The entire country peaked in delinquency in 2010. New Jersey did not until after 2012, and that was Sandy. And we were still dealing with Katrina issues. So in this specific case, even in Florida, you had most of all these claims are getting denied, but most people in this country don't have flood insurance. Only 4% of it, according to FEMA,
Right.
where 99% of counties flood. So these folks they're not going to have any insurance. They're not going to have the right coverage, and as well as and a lot of these were short-term rental, Dale, like a lot of these
Right.
and on the Blue Ridge
Airbnb.
Parkway, Airbnb, Vacasa. And so this is cash flow that's gone. So it's not
Yeah.
just that people are losing their homes and also then purchasing power because of the loss of that home and then having to find somewhere else to live, but it's
Yeah.
also just the amount of small businesses in places like Asheville. And it wasn't just Asheville. There's, almost hundreds of little towns along the Blue Ridge Parkway that were impacted. And so this is going to be a huge economic event. And, Milton, I think, is going to cause a mass exodus from Florida. Just, you had Helene and Milton, and some of these people were hit by Debbie as well. And so that's what I've been really diving into these counties. And you can already start to see the distress in the counties where Idalia and Debbie hit. And now we're about to see the impacts of Helene and Milton. And delinquency was already ticking up. It was up 3.48% month over month already for mortgage delinquency.
When we talked, you said that inventories are climbing in California, which is, where, people can leave and buy three homes if they sell their one house in San Diego. So, could it be that the states that, the bigger the bubble, the bigger the pop, the larger the price increases that we had that were parabolic, those are the ones that can drop more than 50%?
Yeah, they could. They absolutely could. But even I live in a tiny little town in East Tennessee, and you can see the speculation here. Everywhere, there's new build sites everywhere that are empty. And so I believe it. So, yes, in those crazy areas like Austin, where we've already seen declines, where we've had that they will be impacted more. But this is going to really impact nationally. And of course, you always have your little areas that are safe, but people have been telling me all year Washington, D.C., for instance, was safe. It's not. You can see it right now. It's happening already. Inventory, price declines. And out in California, the other thing people don't think a lot about is foreign buyers.
Yeah,
And foreign buyers are a big part of California and
they
Florida.
sure are. They come with
And
suitcases full of money from China
correct, correct.
because
Well,
I
guess
sold
what?
one. Yeah,
Yeah. Oh,
yeah, they
did
can't
you?
get out. They can't get out now with their suitcases,
Right.
right?
And so it's down 26%. It's down 20.
Okay.
They can't get out with their suitcases, Dale, and some of them need that money. Some of them
Yeah.
are hurting so badly. They are selling properties. And so I think California is about to be very surprised because everybody kind of thinks that market is immune
It's
except for
immune.
like San Francisco. But now, San Francisco's back, even though nobody really wants to go there. But because of, AI and things like that, which you know, I worked in technology. There's going to be some great innovations, but it's going to take a very long time before they make money. And so this, in my opinion, is also a bubble which will impact the California market as things start to
Yeah.
deteriorate as conditions in the stock market, because I do believe there's a lot of fraud around Nvidia. There's a lot of things going on. And I think really after we get past the election, that stuff is going to become more apparent.
Okay. That's interesting. When we talk about Airbnb, I actually looked at a chart of Airbnb and they showed dots. I think you showed the dot of Southern California, and the dots cover up the whole map.
Right.
Okay, so
That's right.
I was thinking about, as a strategist, which you are, it's not going to be the same play it was last time. We don't have those CDOs or CDSs. We don't have the derivative situation we had in '08, do we? Or is that still the same play that we had
I
back
think
then?
we still have a lot of that rehypothecation. I think, unfortunately, too, we've got some crazy different types of securitizations that are happening and the CLOs. And I think they're calling it a different thing. But it's the shadow banks. It's hard. This stuff is so hard to track because a lot of it's off balance sheet. But I
Right.
absolutely believe we do have that. We still have that rehypothecation. And it's probably worse. And it might not be in a CDO, but it's in a CLO instead. And so, even in 2015, at the end of The Big Short, they said, and now they've come up with this product, the CLO.
Okay.
collateralized loan obligations. Yeah.
All right. So that, if you're sophisticated, that might be a way to go. It takes a lot of
Work.
sophistication to know to trade those kind of instruments. So I
Absolutely.
thought I thought I'd bring up the poster boy. And when you look at this chart and compare it to what the general market has done, the S&Ps, and so we topped at the end of 22. Since that time, the Dow, Nasdaq, everything has screamed into new record highs. This would be analogous to about 4,800 in the S&Ps, and we're trading 5,800. Could this be the play? Looking for shorts in Airbnb or strategists? How are you looking to play it? And if there isn't a way to take advantage of it, what's the best way for people to protect themselves from what you see
Mhm.
coming?
Yeah. So this to me, Airbnb never made sense. Just from their model was just to add inventory, and what they did was kind of dilute their client base with that, so people couldn't make money anymore. And really, they have been riding on a wave of narrative. This company may exist in the future, and I say may. But they've got so many headwinds right now, regulatory headwinds. People are very angry. And so, all over the country, you've got initiatives to regulate this. People want their housing back. And so, although this isn't an investment advice, I would say this company it's based on nothing. There's no foundation, and they're going to have a lot of trouble in the next 24 months.
Okay.
And then to
And
stay safe,
yeah, okay. And to stay safe, what
yeah.
should people sell their house and rent? Most people would be afraid to do that.
Yeah. So most people, this is what I would say. Your home, it all depends on it. Do you look at your home as an investment? Do you look at it as where you want to live for the next 15 years? And if it's where
Yeah,
you want to live for the next 15 years and you're happy, there you don't need to do anything. I mean,
right.
but if you are thinking you want to sell in a year or you have investment properties, what I would recommend to everyone right now is just to list and just see, because Fannie Mae did an appraisal letter where they talked about they think 55% of appraisals were inflated. Um, and your Zestimate is not really based on good math. It's not good comps. And so I don't think homes are worth what people think, and they need to manage their expectations. What's happening right now is you have such a low volume of sales. And the only people that are participating are the top 10%. And so it looks as if prices are being sustained. But in reality, when you look at the list price, and you can find that chart on Fred, the median list price, that's a better indicator. And that has been coming down. It did not reach its former high like the median existing home price did in June. And so list, that's what I would say. But any
Okay.
traders out there that get super excited about the builders and shorting those, we saw DR Horton today. Just be careful. Lennar was bailed out last time. There's a lot of government participation around these builders, and they're all involved in these affordable housing initiatives and grants and things like that. So that would be my only kind of caution, as well as the government's going to try to step in and save housing. It's such a huge part of the market, as we know.
Yeah.
So just always be aware of that. But I still believe no matter what they do, the amount of speculation is not going to, these prices won't be maintained. And then, of course, of unaffordability.
Okay. And you talk about the PPP loans, and you talk about the forbearance of people not having to pay something that was tacked onto the back of their loan that
Mm-hmm.
also plays a role in reducing the equity that they have. And I was just thinking, I used to look at Zestimates, and they were always high, even when things were good. And I think Zillow's going to have to rename it to Justimates. So you justimate to me about this price. So,
I love it.
here's DR Horton. Yeah, it looks a
Mhm.
little heavy. So home builders, could also be a play because they won't build or they're what's the bearish argument? Because they're not inventory, they're building inventory.
They're building inventory and they are at the highest levels we've seen.
Look at that.
Yeah.
Yeah.
So there is so much inventory, Dale, and they have been able to do things to protect their margins. That runway is over, and with the 10-year doing what it's doing right now, which is something heavily in their models, that's going. I'm waiting for a builder to panic and start selling. They've already had massive reductions in prices with the incentives. You can look at Lennar's 10Q and they're spending 40,000, 60,000 per home to sell it. So it's just a matter of time, and those borrowings at those low rates are expiring. Those margins are going to go away, and we're going to start to see some panic selling. But like last time, you can go back to a 2009 article from Lennar talking about its tax bailout when they were trying to mea culpa for building too much. They've built 3 times that much now. So they've got a ton of inventory. They have to move it, and that's also going to be an impact on prices. But they've got trouble ahead. But they will go to the government, put their hands out, and say, "I'll help you with affordable housing if you help me out."
Yeah. So there was already a demographic argument for a bear market
Yes,
in right. That the population is boomers are getting older, they need to downsize. And there's an expression that houses don't die, people do,
that's
which
right.
means that they're going to be that there would be plenty of inventory just based upon that. Is it true that, I was always, learned or heard the narrative that it was going to be very hard to replace the baby boomers for demand. But the narrative has been that, the millennials or another generation, is there any generation that could replace what the baby boomers were to the market
Uh,
demographically?
Not in my opinion, and this will get hate, but the only way you do that is immigration, right?
All right. Yeah.
Like exponential. And so, and the other thing is, Harvard did a study, and what we did in COVID is we pulled forward that millennial demand. And
Right.
so we've already taken that really the positive from that. And so what you're actually seeing now is reconsolidation. I'm expecting to see the household size kind of tick up where we were at 2.6, per household. We're going to see that go up as people have to consolidate, as well
Yeah.
as you have 15 million vacant properties. A lot of these wealthy boomers have first, second, third homes, and it'll be very easy to make a decision about letting one go or selling one or giving one to one of their kids. So, yeah, this what I never understood. It was true the demographic argument that I was like, how can anybody think that we are running out of inventory? But then you tack on the speculation, and that's, inventory has just exploded, as well as quickly. I just want to say, where does Fred get its data for inventory that they populate on their site? From
Yeah.
realtor.com.
Okay. Yeah.
And I think a lot of people have stopped losing or stopped using those official listing sites and use social media. And so there's a whole bunch of reasons why
They're
that
called
inventory.
pocket listings.
Pocket listings. That's right. And in Austin, they made up about 30% of the sales there. So there is a ton of inventory. I've seen it with my own eyes. That narrative is just absolutely, it's just not true. And maybe it's misguided, but at this point, I think NAR is just doing everything it can to prop up the housing market.
Okay. If we have once we're into this GFC 2.0, is there going to be a way to finance a home after all the carnage? Say prices drop 50%, that it's going to be, you might have lower prices and maybe not a job. That's part of the problem. If we have a real estate break, it's going to affect a lot of people, a lot of their employment.
Yeah.
But say you're lucky and you have a job and you have some money put away. Um, when do you think would be a good time for someone to start coming into it or even buying their first home? Should they wait a couple of years and let the dust settle?
I'm always a fan of being cautious, but if you are really motivated, there are ways that you can do the research and get good deals because we're about to start seeing a lot of distressed selling. We've already started seeing motivated selling, but we'll start to see distressed selling. And so you can go to county records, you can sign up for something called not endorsing it or promoting it, but property radar, where you can actually get the address of people at I want to address what he just said, but you can get the addresses of people that are in default, and you can actually reach out through like a postcard or something and say you're interested. There are a lot of ways for somebody who really, really wants to buy to negotiate, get a deal, but it takes a lot of work. But honestly, it probably is better to wait out at least over the next 12 months to see how this is what the direction is. But quickly to address what he said about the 25,000,
Yeah.
that Kamala, that has
Yeah.
already existed. That has already existed. You can go to Detroit right now, get $25,000 down payment assistance. You can go to California and get 50,000. And that is part of why these home prices have continued to stay high. And so that they gave a ton of money to the states, and that's what every state did. And there is still money left over, Dale. It has not been spent. So that was very disingenuous when they talked about that program, in my opinion.
Okay. Well, you know what? I feel your authenticity when I talk to you, and that's why I wanted to bring you into the FACE community so that our community has information. Because I say keep an open mind, it'll keep your account open. Well, you have to keep an open, yeah, you have to keep an open mind when it comes to something that recency bias. People have forgotten 2008, 2009, and they'll say, well, all I had to do was hold on to it and look, my house is worth more. Same with the market. So, this is going to shock a lot of people because real estate only goes up, Melody. You know that.
That's right. I know it. Mhm.
And the best way for people to stay in touch. I know you have a YouTube channel. What's it listed under? Your you.
M3 Melody. And so
Oh,
that's my YouTube and my Substack and my X Twitter handle is M3_Melody.
okay. Well, if you have a roof over your head, and I know at least you know people that have many roofs, you need to get this video out to them so that you might be able to help them avoid a landmine.
That's right.
Melody, thank you for being here and for your hard work of going directly to these places and not just trusting what you see on your screen. I really respect that, and I'm so glad our paths crossed. And keep getting the message out.
Same.
Appreciate
Thank you
it.
so much. It was an honor. Thanks,
All
Dale.
right,
See you soon.
Melody
Okay.
Wright, everybody. Okay, that's a wrap. And you could join the team in 10 minutes on the Morning Edge. Everyone, good luck. I see the dollar is exploding, huh? Yeah. Okay. So have a great day. We'll see what happens here. And tomorrow, see you tomorrow. Don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.